All right. So this has been a long time coming, and I'm excited to have Richie Marrero as my guest. Richie, you have been instrumental in my life and in my financial planning decisions and mindset. And today we're going to talk about building wealth and personal financial planning. So welcome to my show.
It is an absolute pleasure to be with you, Liz. I've been able to see your journey, see your growth. And first and foremost, I want to thank you for the opportunity. And then secondly, I want to thank you for creating an atmosphere and an environment where folks can tap in, where folks can learn. And I'm excited to be your person providing a little bit of knowledge today. So thank you.
Definitely, you are my person because I couldn't think of anybody else but you to talk about this topic, this very important topic. We're going to talk about money. But before we
Mm.
dive into it, Richie, can you share a bit of your career journey and what inspired you to do the work that you do today?
Yeah, absolutely. I think when I look at my journey, it's a lot of turns and twists and a lot of things that make up who I am today. Ultimately, many of you who are going to be listening today, I grew up in Humboldt Park, so to a single mom, and I have a couple of daughters in the background screaming right now. If you hear them, I apologize. But I grew up to a single mom. We lived hand to mouth. We didn't have a lot of structure in how we went about our finances in the house, and that drastically impacted the choices and the opportunities that we were able to make for me growing up. I'm one of four. I have two older brothers and a younger sister. They're significantly older than me, about 9 and 8 years older than me. So I learned a lot from their experiences as well. But ultimately, I knew that I wanted to be a servant leader. I knew that I wanted to be in a position where I could impact people. So when I went to undergrad, I was fortunate enough to get a scholarship to go to the University of Wisconsin in Madison. And I pursued a career in social work because I wanted to help, right? And then I got back from Madison and I pursued a master's degree in social work. Again, a desire to be the person that provided empowerment to our community. I was working in CPS as a social worker, trying to serve youth that grew up very similar to how I grew up. So I've had a firsthand experience and I can lead with a lot of empathy and try to guide them in a manner that I thought was helpful. Quickly realized that CPS is a monster and it's very difficult to have an impact just because of the social hierarchy that exists within the CPS school system. So that journey led me to helping my kids and their parents through after school programming where I was helping them do basic financial literacy stuff. So understanding about checkbooks, budgeting, and many of our students' parents were taking their hard-earned money and going to a currency exchange to cash their checks. So that was my first foray into helping people, educate people on money. I was coaching them on bank accounts and things of that nature. So fast forward, I decided that social work in a school setting was probably not my end-all be-all. So I started interviewing at financial service firms, Mass Mutual, Northwestern Mutual, Morgan Stanley, some of the names that you guys may recognize in the financial service world. And I learned that I wanted to help people make decisions around insurance and money. My father passed away when I was 10 years old and we didn't have any insurance. So I landed at Mass Mutual and I was helping people make decisions around financial planning and then basic insurances like life insurance, disability insurance, long-term care insurance were some of the key products that people can purchase to provide risk management or protection for their family, if you will. And I fell in love with it. I always tell people that I'm still practicing social work just in a different capacity. And since then, I've even added to the services that I provide, and now I work in the employee benefit space, helping organizations between 100 and a couple thousand employees make decisions around their healthcare for themselves and their employees. So I say all that to say that it's been a crazy winding road and a journey to get to where I'm at today. But at the core and the essence of what I do is I serve people. I help people make decisions that are going to put them in the best position to succeed. And it's success on their terms, right? I think that that's something that you'll hear loud and clear as we talk a little bit today. And I say all that to say that I've also made mistakes. I've made a lot of financial mistakes and I've grown and learned from them and I've tried to educate others so that they don't fall through those same pitfalls. And I think a lot of my mistakes came from not understanding or having a background or familial understanding of wealth or money or budgeting or finances, if you will. And again, I say I grew up dirt poor, and a lot of times in the community, even people that I've helped in their planning journey, what we see is that when we get our first job or we start to make a little bit of money, we felt like deprived, like we've been poor our whole lives or we haven't had money our whole lives. So now I've earned the opportunity to go out and ball on a budget or ball out, right? So I made my first mistake, purchasing a car that I probably shouldn't have purchased when I was young, but I've learned from that and I've shared that wisdom with other people. So it's been a really cool trials and balances, or trials and errors on my end and my growth journey personally. And then I've been able to instill some of that on clients, friends, family, people that are taking advice from me.
Thank you for sharing that. And I think this is why, working with you really resonated with me. And first of all, even just having that social work background, there's something about you, right, that I was able to trust. And I'll say that talking about money or investing or doing anything with money, that's scary. At least it was for me and for Juan, my partner. And we were like, we don't trust anyone with our money. What do you want to do? Don't sell me anything. And so I think a lot of people are not informed, like you said, or we make mistakes. And it's like, you never know when it's the right time. Like, I know when I first started working, I didn't think, I'm like, there's no way I can save. Like for me, I'm like, I just don't want to get into debt. That was success for me because that's what I learned growing up. Like, don't get into debt, don't use credit cards. But I never actually thought about financial growth. And I'm like, I don't make enough to even invest or do anything. And then now that I'm, older, I'm like, oh, is it too late? But then, it was in my 30s when I met you, and it was like, ah. And so kind of given the hesitancy that I'm sure you've seen, when is a good time to establish a financial plan?
Yeah, I love that question. And I think it's a good question because there's no right answer. What I always tell people is the right time is now. Because the longer we wait, the more difficult and the more variables are put into play, right? So if we can start to develop healthy habits, I think planning is just healthy habits around money, around, I think the budgeting is probably the biggest thing for people to start to grapple with earlier on. Because as you go through your career, the objective is to earn more. The objective is to create more opportunity for yourself through earning more. And innately you will, as you go through your professional journey, you're just innately going to make more money. So if you start those healthy habits when you're maybe earning less, right? And you've created a foundation of what that looks like, it's going to be easier as you make more money. And, the adage is that as you make more money, your lifestyle changes, right? You start to purchase more, you start to grow into what you're earning, right? The problem is a lot of times people don't start early enough. And then when they decide to start, it's very late. And what you've created is a little bit of a gap, right? And there's a beautiful thing, it's called compound interest, right? The sooner we start saving, the more it grows on top of each other. So I say the right time is now, and make yourself accountable to starting sooner than later. And then the journey that you go on, it's your journey, right? I think that in our community and in most people don't talk about money openly. There's this taboo about money. And you shouldn't feel any less because you make less money than someone else, because I'll be the first one to tell you, I've sat down with people that make hundreds of thousands of dollars a year and their finances are in disarray. And it's because they don't have healthy habits. They don't have the discipline to hold themselves accountable to achieving certain goals that they might have set out for themselves. So I think that the right time is now for everyone, right? And I think that process should look a little something like this: is you sit down and you make a commitment to yourself that you're going to be disciplined around money. And then the next step should be doing some homework. Do I need help, or should I create a foundational budget, right? Should I look at my finances? The easiest thing to do is income, debts. What do I owe? What are my monthly expenditures? And what do I have left over? And of what I have left over, what am I doing with that, right? And can I pull that to put it in buckets that are more appropriate for what I want to accomplish long term, right? And I always like to have small goals, and then also bigger, longer term goals, right? Because saving for no reason it can be a challenge, right? Or with no end in mind, it can be difficult. You're like, I'm saving all this money, I need to live today. the one advice I got when I first started in the business and I started helping people plan and prepare, I say, let's prepare as if we're going to live forever, right? Let's plan like we're going to live forever, but let's live like we're going to die tomorrow, right? So if you prepare in that manner, what you find is that you are doing all the things you need to do in order to put yourself in a sound financial position long term, but you're also not minimizing your ability to enjoy life. I think that life is about experiences. Life is about celebrating with the people that we love, having experiences with the people we love. So I oftentimes find that people get distracted. Oh, I need to save. I need to save. I need to save. Yes, with purpose, right? And I think that idea of success needs to be your idea of success. I think too often we're looking over our shoulder to see what other people think of what our current situation is. And you shouldn't be planning for others. You should be planning for yourself, and making sure that you create the life that you want to live. And I call that financial freedom.
Yeah, absolutely. And I think that's what really resonated with me when you and I first met. Because I was that person. I'm like, I just want to save. And you're like, what are you saving for? I'm like, I don't know, a rainy day. And then you're like, and then exactly what you just said, I'm like, oh, well, that makes sense. And I know I had a lot of hesitancy, but again, trust. I think that's the first part, because I know I needed guidance. I did not grow up in a household where we learned about financial literacy, and they don't teach you that in school. And it was you.
It's the biggest mistake our school system makes.
Yes.
We don't talk to kids about finances at all. It's crazy.
It's so important, and it's so impactful, especially when you're thinking about your career, like you're talking about success and building wealth. And I definitely know those people that have those very high level incomes, but they're in debt. So knowing how to manage that, and you said even knowing what your goals are. And so people that might be hesitant or never considered working with a financial advisor, why should someone work with a financial advisor?
Accountability. I think that's the biggest thing. People have this idea that a financial advisor is going to help you grow money. That's just one aspect of what an advisor, him or her, are going to help you do. But I think it's being able to have a checkpoint and someone that you can confide in that has a good understanding or open lens to everything that's going on in your life, bills, expenditures, income, growth, and they can help you create a roadmap to what that ultimate goals that you have in mind are. Because if you go to an advisor and you say, hey, I don't have any goals, I don't have anything that I'm saving these dollars for, they're going to have some trouble guiding you. They might help you grow your money in the investment accounts or the marketplace, but they want to help you have a strategic plan that are going to help you meet certain metrics in your life, certain goals that you might have. Finding that person is exactly what you said, Liz. It's about trust. Make sure that person knows who you are. Make sure you're being transparent, candid with that person, because that person is responsible for helping you meet and holding you accountable for your set objectives and goals, right? You don't want an order taker. You want somebody that has a vision that's based off what you shared with them, right? And that person will guide you to what is ultimately success, because you've envisioned it, because it's your picture of success, right? So that's the one thing that I always want to harp is that you're driving that car. You're the driver in the car. They're just the GPS, right? And they're giving you the directions and the guidance based off of what you shared with them as your destination. I think that's extremely critical, because it's your journey and they're just your co-pilot.
Yeah. And the other thing too is simplifying, because for me at first, I was so confused. I'm still am confused about a lot of things, but I think the basics, you were so patient in explaining to us what each thing meant and why. And I didn't feel pressured. And that's what I was afraid of. And so that, like you said, walking us through that journey, holding us accountable, but educating us as to why we were to explore our options based on our reality and even our risk taking. I know we talked a lot about that, which I think is extremely important. Now, the savings conversation came up. So there are people that are disciplined. They're like, they live frugal and they're like, yes, save, especially the pandemic, like that allowed for many of us to like just save, right?
Hmm.
What advice do you have for people who are just using right now that Chase, I don't know, savings account that it builds like, what is it, 0.001%? Like, what is your advice to those individuals?
Yeah, it's funny that you say that because nowadays with the high interest rate environment, you're actually seeing some high yield savings accounts that are attractive, and in the past that wasn't always the case. But in addition to just saving, I always say that you should never save more than what you need for your rainy day fund, right? Like conservatively 3 months of your fixed expenditures. If you have that saved in a savings account, you can probably take dollars and put them in other places to grow at a much more rapid pace. If you're uber conservative, like the head of a household, you might say, I need 6 months of savings, right? You might want to have 6 months of savings for your rainy day fund to make sure that if, God forbid, something happened where you are no longer being able to earn, that you can have 6 months runway of comfort knowing that your bills are going to be paid. And then in addition to that, we should be looking at ways to grow those dollars outside of a savings account that, to your point, is getting you very, very little interest rate growth or growth in general. There's, everything from IRAs, which are individual retirement accounts. You can go into a traditional brokerage account and put your money in the market, the stock market. There's a lot of ways to grow wealth outside of a savings account. And what I'll touch on, I won't get into the weeds too much, but I'll touch on historically, Latinos, we like to have money in a bank account and look at it and know it's there, right? It's tangible. We can get our hands on it if we need to. But I've seen that be work adversely against Latinos, where you have, a couple $100,000 after a 20, 30-year working career sitting in a savings account in the bank that could have been growing for decades, and you just had it sitting there. The bank is taking those dollars and they're investing them, right? They're taking your money that you put in their accounts and they're investing it so that they can grow their portfolio, their bank portfolio. We should be thinking the same way as people that have cash sitting on the sidelines. We should be finding ways to allow those dollars to work for us, right? And whether that's retirement accounts, brokerage accounts, investing in real estate, there's a lot of different ways to invest our dollars. We just got to do our research. We got to make sure that we're being smart with where we're putting those dollars and how we're helping those dollars grow. The one point that I want to make is if we're just keeping all of our money in a savings account, where the time value of money is costing us money. The ability to take those dollars and put them in somewhere that's going to grow at a much more rapid pace is important. The longer we keep it just in a savings account, we're hamstringing ourselves and not allowing those dollars to work for us in the manner that they could.
Yeah, that's so important. I think that's one of the things that you really helped and change that mindset. And this is when you really do want to consider working with a financial planner advisor that can educate, and depending on your risk taking, right? As you have talked to us about as well, because I think it's scary too that, you save your money. And for me, like my fear is always like, oh, I don't want to invest and then I lose all my money. I think that's a fear too, right?
Yeah, it's a huge fear, and it's a valid one. What I always tell people is that if you're in my philosophy for myself as well, is I'm in it for the long haul. I think our risk changes as we age, but during our income earning years, we should really be aggressive, because if you look at the historical performance of the market, it always is going in the right direction. There's been no 10-year period in the history of the market where it's been loss, where it's suffered, right? It's always trending in the right direction. So if you're in it for the long haul, as we all should be, I think our earning years, in my opinion, are typically going to be between our mid 20s all the way to our late 50s, early 60s is where we're going to earn the bulk of our money. And some of us, unfortunately, have to work a lot longer because we didn't do a good job of planning and preparing early on in our lives, right? And that's something that I'm always scared of in our community, the Black and brown community, for, the most part is our people have to work a lot longer because they haven't done as good a job or been as diligent in their savings. And I think it's not because they don't want to. I think it's because they're not aware. I think it's because they don't have a person or a group of people that they can rely on and trust to help them make decisions around money.
Yeah, no, that's really important. I think that self-awareness piece. And you're right. I
Hmm.
wish that I had this information in my early 20s. But as you mentioned too, like it's not too late. There's still time. So regardless of where you're at, there are people can work with what you have at your current whatever situation it is. So yeah, the time is now. I love that philosophy. Richie, when I talk
Yeah,
to
absolutely.
oh go ahead.
No, absolutely. You're right. I think that people, you can't get discouraged because you're a little bit older when you're starting. I think, again, the time is now. We shouldn't be discouraged because we're going to live long lives in most cases. And if we just throw our hands up and say, "Oh, I didn't start, why would I start now?" You're just going to be digging a deeper hole. I think at the end of the day, the sooner we start, the better. Sorry, I cut you off.
No, that's good. This is great conversation. Like you're the expert in all this. So I'm a sponge. uh
Mm.
Now when I do talk to people and I'm sure you get this too, and people say, one of my goals is financial freedom. What is financial freedom? What does that look like to you?
Yeah, I get back to financial freedom for me is something that I feel is having options, having little stress around daily needs and like knowing that all of my bills are paid, knowing that, let me share a story. I think
Go for
a
it.
good way, let me share a story. So I'll take it back to my childhood. I was a pretty good athlete. I played baseball, basketball, and football in high school. And I was always unable to attend certain camps that I wanted to go to. I was always unable to attend anything that cost additional dollars for me to go, right? Like whether it was a program for some of the top baseball players in the Chicagoland area, but you had to pay to travel to go to a camp, right? I could never do those things. And as a young man, it really bothered me, right? It bothered me because I felt like I didn't have the opportunities to showcase my abilities. And it wasn't because I wasn't gifted enough talent-wise. It was because I didn't have the financial means to attend those programs. So as I grew up, one thing that I live by is I will never have to make decisions around opportunities and things that I provide for my family based off financials. And sometimes you have to take account for that, but it was very important for me to say, hey, I'm going to put myself and I'm going to work off my tail off, and I'm going to be disciplined enough to put my family in a financial position where we won't have to say yes or no to something that will impact our daughter's upbringing because of money. And that's something that I've always lived by. And a lot of the work is done behind the scenes to make sure that the financial house is in order so we don't have to be dealing with that. But that was always something. It was just about discipline. It was about, if I have an opportunity, I'm going to seize the moment and I'm going to put myself in the best position to succeed long term. And that to me is financial freedom. It is not being hindered or impinged on being able to do something you really want to do for your family based off the fact that you can't afford it. Right. And that's something that it's a journey that we'll all be on. And at certain points, it's going to be more realistic for some at certain points in their life. But that's my definition of financial freedom, is not being constrained by with opportunity because of money. Yeah, and it wasn't always that way. My early working years, and as I grew in my career, it was always about getting to that level of financial freedom. And I can, with happiness say that today, our family, my wife, our children, I have two daughters, 7 and 5. They're living very differently than I grew up. And that was because of discipline. That was because of living a life of purpose and being intentional about putting ourselves in a good financial position. And that's a long journey, right? It started with education and then career opportunity, yada, yada. There's a lot of steps to that. But if someone wants that, they can have it. And it starts with baby steps, because I don't care what you earn.
Yep.
Right? Because you just need to make sure that you're living within those means, and then setting expectations and having the discipline to achieve those said metrics that you set out for yourself. But that's my definition, and that definition can be different for you, Liz, and other people. But at the end of the day, we need to be true to ourselves and make sure that we're working towards, our objective. And for me, financial freedom is at the pinnacle. It's the most important thing for me.
Yeah, absolutely. And I think like you talk about your upbringing, I think that really makes a difference in the way that our relationship with money. And,
Absolutely.
growing up in households, similarly to yours, I come from a single family, or dad, and he struggled financially, being laid off and not working for for 4 years, and just seeing him struggle and trying to bounce back. And so for me, that's one of the values, one of my priorities is I want to be comfortable. And like you said, like I hate that feeling of like, I can't do that because I can't afford it. But you use a very key word, discipline. And so, no, I cannot live a lavish life. However, it's knowing where and when, and like, me, travel is like a big thing.
Yeah.
So that is like, to me, that's a non-negotiable. But there are other things like I don't care about, but it's that discipline, because I would rather feel that comfort. And I think it's the upbringing. And Richie, so one of the things that I wanted to ask you, and again, I think about, my dad or just other people that they're like, I can't even think about investing or saving because I'm just trying to get out of debt. What advice do you have for people that want to reach that financial freedom that maybe right now it's difficult because they are in financial debt?
I always like this, that tough times don't last, tough people do. There's a saying that I say all the time. And the reason why I say that is everyone's gonna have struggles in their life at one point or another, whether it's financial struggles or mental or stressors that create financial struggles, right? But it's important to have a plan of action, right? So if you have debt and you're drowning in it, let's say, right? There's ways that you can address that. There's credit repair folks out there. And what credit repair folks do is, and I have some good friends in my network that help folks with that, is they create a plan or a system to help you repair your credit, and it just takes time, right? So tough times don't last, tough people do. So you get into this plan and you get into this future endeavor, but it takes baby steps in order for you to get out of that. And what you'll do is you tackle it one at a time, right? So let me give you an example. If you have 3 credit cards that you're using, right? This is another pet peeve. I'm going to go on a little soapbox here before I get into my point. But when you look at our society and you look at, if you're an entrepreneur, they won't give you a loan to start a business, but they'll give you $100,000 loan to go to college.
Yep.
Right. So when you look at it, it's so ass backwards, and you're like, I don't care about school. I don't want to go to college, right? If that's you, but the only way to succeed is to go to college. So if you're entrepreneurial, you can't get a business loan without a college degree, but you can go out and get $100,000 loan without a job. It's like,
It's so
what
twisted.
is going on with our society? Yeah. So that's the one thing that I always think is funny about our world. Now, getting back to repairing credit and having an approach there. Let me give you an example. You have 3 credit cards, right? What I would do is I would say, okay, we have these 3 credit cards. What are the interest rates on these credit cards? What's the balances? What are the limits, right? So starting to understand that can help you reduce those cards balances, but also do it in the right manner, right? And now as you get closer and closer to being on regular pay schedules, you're going to boost your credit. You could also call those credit card companies and be honest with them and say, hey, I have 3 credit cards. Here's my limits. This is this is my current situation. I want to get on a payment plan with you. Can I do it in this order? Or be strategic. I shared this with a lot of people. If you have multiple credit cards, go get one more credit card that has a bigger limit where you could transfer those balances. And now you buy yourself a little bit of wiggle room, and then be strategic. Pay the higher interest rate credit cards first, and then pay the other monthly installments on the other ones, the minimum that you can, and then start chopping away, right? And then this is where budgeting comes into play. If you're struggling and you have bad credit, it's because you have a shitty budget. It's because you haven't really sat down and understood what your expenses are. If we can sit down and understand our expenditures and understand what we need to make in order to pay for our fixed expenditures, we're going to be in a much better position. I think it just takes that discipline to sit down and say, hey, I need to face this and I need to start moving in the right direction. And the sooner we get to a place of reality where we're looking ourselves in the mirror and saying, hey, this is important. I don't want to live like this anymore. I don't want to continue to be in debt. What are the steps I need to take in order to do that? You'll be in a much better place. And that's where a coach or a consultant or they can be helpful, because they can hold you accountable, because it's not going to be easy, and nothing is. There's, shame comes into play. You don't want to share your situation with other people because you're embarrassed. It's your life, and the only one that can make it better is you, and you need to be responsible for making it better and pull those people in that are your champions, that want to see you succeed, and lean on those folks.
Yeah, and that there are strategies that you can implement, and it's by asking questions, people that are informed, people that can share this knowledge. I know when we
Yep.
first started, when Juan and I got married very young, and we didn't have a lot of money, but we had to rely on the credit cards, right? That's what we knew. And that was actually a strategy we used, was we got one of those credit cards that had like 0% APR. I didn't even know about percentage rates. Like there was one, it was like 20%. It's like, we have no freaking clue. And so being able to combine it, and then even calling, I remember calling a credit card and saying, look, I pay my bills on time. Can you reduce that, that annual percentage rate, the interest rate? And they did. And so that was helpful. It's just, I don't know, someone shared that strategy with me, and I'm like, I'm going to do this. I'm like, okay, I hate credit cards. No more credit cards. But that was something that I learned early on.
And I'll keep on the concept of credit cards. I think when you have a bad experience like that, you could actually have a negative relationship with credit cards. So even in my household, like, I use credit cards. But what I do is, when I use credit cards, I make sure that I pay the entire balance at the end of the month. And credit cards have actually helped me build my credit score. Whenever I need to borrow money, if I ever need to borrow money, I have access to lower APRs. I have access to money. Banks only borrow you money when they know you don't need it.
Yep.
They know you don't need it because you maintain a good credit score and you don't have a lot of outstanding balances. So having a positive relationship with credit cards can be powerful as well. And I'll share another example.
Go for it.
So my kids, right? We have credit cards, and as soon as my kids are eligible to be a signee, or like one of our people on our credit cards, most of the credit card companies only allow it after like 12 or 13 years old. I'm going to assign them a credit card, and we will use those credit cards so that we can begin to build their credit, right? Mm-hmm. Like it's this cycle. And I talk to my kids about money every day. My 7-year-old has a checking account where she has a debit card, and we talk about money and the power of money and how things cost money. Like, this is stuff that we can start. If we haven't planned, or we haven't been educated on how to plan, it's important that we do it, because now we can start to share that with other generations of friends, families, kids, people in our network, so that there's no longer a taboo or bound conversations about money, right? Because the longer we keep them in silence or in the dark, the bigger detriment we're doing to our kids and our friends' kids and young people that we are, providing guidance and advice to.
Yeah, and this is what everybody's talking about, right? Like, I want to build generational wealth. Like, this is where it starts. And having that understanding. Wow, your kids are lucky. They're, you're really setting them up and knowing that early at 7 years old. My goodness, that's fantastic.
It was a good thing for me. This is kind of funny, because who likes going to Target or any of the stores with their kids, and their kids are always asking them for something, right? So what I do is I say, oh, you want that? It's $13. You want to use your checking account? You have money in there. And what's her yes. Her immediate response is, oh, I don't want to spend my money. I'm like, well, then I don't want to spend my money.
That's right.
Right. So it's like ingraining them that, you can get what you need, but you don't get what you want all the time.
That's life. And you got to pick and choose, right?
Absolutely. Yeah.
All right. So I'm going to shift the conversation a little bit, because I know that this is something that we are faced with, especially when applying for a new position. And, we talk about opportunities for retirement or retirement plans. Now, should we be looking at other plans beyond what our employer provides?
Yeah, that's a great question, Liz. So most organizations are going to provide you a employer-sponsored plan, which is like a 401k or a 403b if you're in the nonprofit world. And those are great. And if they match or they provide some funding into those accounts on your behalf, even better. And those accounts are giving us the ability to save money in a pre-tax environment. Okay. So what that means is, if I'm going to use round numbers, if I'm making $50,000 a year and I want to put a $5,000 into my 401k, that means that I'll be taxed on $45,000 of income at the end of the year. Okay. So it's a nice pre-tax bucket, and it gives us the ability to save money on a regular basis. I love, and if you have the ability to max out your 401k, which the annual limit changes year over year, I would max it out if it's possible. That's not possible for everyone, right? So, yes, you should be investing in there. And then there's other accounts that we have access to, right? Many of you may or may not have heard of what are called IRAs, and there's a couple different IRAs. Those are individual retirement accounts. Those sit outside of your employer. They are also a bucket that you can put money into. And there's a couple of rules around them. And there's the difference between a Roth IRA, which is a pre-tax retirement account, and a IRA, which is a post-tax retirement account. So you don't get the deduction in that account like you would a 401k or a Roth IRA. Now, there's also income limits. This is where it can get a little confusing for people. Mm-hmm. But to answer your question, yes, you should be contributing to your employer-sponsored account. And then if up until the match, if they provide a match, and then if they're not providing a match, you can still contribute to it. But there's other accounts that I think are favorable as well. And that's where an advisor would come into play. They would help you navigate which ones have the best tax advantages. Where can we put dollars to make sure that they're growing for us? So those are, I won't elaborate too much during our time together today, but those are questions that you should be asking your trusted professional.
Yeah, thank you for sharing that, Rich. And I know we had that conversation. I'm like, wait, what? I'm like, but we already have a retirement plan. And so, like you said, having this conversation with a financial advisor to discuss your specific situation and organization and what that looks like. But I just wanted to kind of put it out there, so people are asking these types of questions. Now, when considering a job offer, I feel like salary could be something, that people are looking at, but the benefits package may not be favorable. So it's really looking at the entire package. In your experience, what should people be looking for in the benefits package?
Yeah, the first thing I'll say is any offer you receive from an employer, there is some ability to negotiate, right? It's always in your best interest, and you can kind of do your homework and be educated about how you present your position. But yeah, the salary, the pay is negotiable, and it's obviously commensurate with your level of experience. But you can do some research and understand what they're paying folks for that same role, and you can ask for more during that negotiation. The labor market right now is favorable to employees, and the job market is there's not a lot of people taking jobs, and the talent is scarce in a lot of situations. So they're looking for talent, and they're willing to pay for it now. So always be willing to negotiate if you feel like you have a negotiation position. Your benefits. When we look at the cost of healthcare, and this is the space that I spend a lot of time in now, working with organizations on their benefits programming and strategy, the cost of healthcare is really, really expensive right now. So going into an employer, looking at that benefit plan is something that you should highly consider, right? You want to make sure that you're not going to spend an extra $20,000, $30,000 a year on healthcare, because that could make your salary look a lot different, right? If you're at a current employer that has a rich benefit offering. So that's something to definitely consider. If I could ever be a resource to anyone in your audience that they have questions around employee benefits program, I'm Liz's friend, and Liz knows how to get a hold of me, because it is critical. It is important. I'll give you an example. My wife's an attorney, and she had gotten a job offer from another employer that was favorable. It was a significant financial base salary raise, but then we scrubbed the benefits, and the benefits cost would have been an additional 10 grand out of her pocket on an annual basis. This is before she came on my benefit plan, but I educated her and I said, hey, that looks very attractive from a salary perspective, but apples to apples, it's not a comparison. You know, you're better off staying where you're at and not taking that pay bump, right? So it is important to review and look through your benefits. And if you're, you know, let's say you're an executive and you're in the middle of your career, or you're in management and they're trying to woo you to come work for them, you have bargaining chips. You can ask for more. You can position yourself to get a better compensation package, and benefits are a part of that compensation package.
Yeah, definitely. And I'm so glad you brought up all of those points about salary negotiation. You know, I feel like employers do carve out that extra wiggle room because they are expecting for people to negotiate. So that's like the
Yep.
first step, right? But then evaluating that offer, as you mentioned, like with the example of your wife, because I've seen that where the starting salary looks incredible, but then there's really very limited health insurance. And that's huge. I mean, having health insurance, regardless of how young you are, you just never know. I've had personal situations where I'm like, yes, we need very grateful that we have, our health insurance coverage through our employers, but something to really think about and consider. So those are some great points that you make. I know I can talk to you all day about this stuff. Go ahead.
I'll share one more thing about health insurance. When you look at the people that have filed for bankruptcy in our country, 80+% of the people that have filed for bankruptcy is because they have outstanding debt because of medical issues, medical bills.
Yeah, that's disheartening. And those are some of the points that you made when you and I started chatting, just kind of that nothing is guaranteed and we can't predict the future. And so being able to be aware of all that, I mean, that's crazy. That's insane.
Yeah, it's unfortunate. And I spend a lot of time in the healthcare space now, so I see it regularly, and it's a broken healthcare system, and we need to position and empower our people to best fend for themselves during, in those environments. So yeah, that was a somber note, but it's the reality.
No, it isn't. And I think because life is unpredictable. And this actually leads me to my final question, because I think this is really, really helpful and for something for people to further explore. What are some insurance policies that we should consider?
Yeah, the things that I think are foundational in our planning is, making sure we're protecting our ability to earn. I'm a big advocate for disability insurance. I'm probably myself overinsured, but I would much rather be overinsured than have to deal with the fact that I don't have an income if something were to happen to me from a disability or a illness standpoint. And then basic life insurance. I lost my dad at 10 years old, and we didn't have any insurance in our house. And that created a lot of burdens and a lot of stress for my mom, so basic life insurance. It doesn't have to be a huge policy. It has to be an appropriate policy to help you, provide for your family if God forbid something were to happen to you. People want insurance when they can't get it. So I always say the sooner you get it, the lesser it's going to be from an expense standpoint. You're healthier, you're younger. So I think, managing risks like disability insurance and life insurance, especially if you have a family or significant others that are dependent on you, and your income, it's important to protect those things. And then as we age, looking at long-term care insurance is another one that could be something that is of interest to folks and can protect folks. We actually see a lot of middle-aged people buying long-term care insurance for their folks. If they can still get it. Sometimes it's based off your health. So if you can't get it, it's unfortunate, but I know we looked into it for my mother, and my mother is just she has a bunch of medical issues, so she can't even get it. But we definitely looked into it to protect future medical bills and expenditures that are going to happen as we
Richie,
age and we live longer.
can you share what is long-term insurance?
Yeah, so long-term care insurance it's an insurance product that basically you pay into, and they start to create a let's call it a bucket of money that can be leveraged to pay for medical assistance down the road. And it boils down to basically 6 daily living activities. So if you can't get out of bed, feed yourself, bathe yourself, transfer, and get to and from places, those would qualify for a long-term care claim. And then that bucket of money that is available is then used to provide you the care that you need, whether it's in a facility or in your own home. It provides the dollars that are necessary to pay for those services.
Now, okay, that's long-term insurance. Can you talk about whole life insurance?
Yeah, so I'll break it down very simply. There's 2 variations of life insurance, and it's whole life and term insurance. And then within term insurance and within whole life insurance, there's a bunch of different types of contracts. Okay, but I'm going to keep it very high level for the sake of this conversation. So whole life insurance is, I'm going to use an analogy. It would be the equivalent of you owning your home. Okay, and term insurance is the equivalent of you renting a home. Okay, so when you're renting a home, you're paying premiums to get this death benefit, which is the life insurance. But at a certain period, a certain term, that insurance will go away. Okay, so let's say it's a 20-year term insurance. At the end of 20 years, you need to decide whether or not you want to get a new policy or keep that policy, and it's going to change in cost on you, right? Just like renting a house. You pay a monthly rent. When your lease is up, you have to make a decision. Do I want to stay here or do I want to leave? And when you decide to stay or leave, the leasing arrangement can change. Same thing like the premiums on a term insurance policy. That's term insurance. Whole life insurance is like owning a home because you're paying premiums into it. It provides you a death benefit, but it provides you cash value. That's same like when you are owning a home, you have equity in your home. The same concept. So those are the 2 different types of insurance. I always tell people you should always start with term insurance, get the right amount, right? You understand what your family's needs are, whether it's to pay off a mortgage, if you want to put kids through college, or you want to, give them your income to the family for a set number of years. And then you have your whole life insurance, which is an asset. And I have a little bit of both. So I have some term insurance still, and I have a good amount of whole life insurance. And I use them in tandem to make sure that I have the right death benefit, but they are serving 2 entirely different purposes.
Yeah,
and then
thank you for.
the hope,
Go ahead.
the hope is that I don't die anytime soon.
Well, right. But and these are difficult conversations to have, right? It's like almost morbid.
Without question.
Feels more, but it's like you said, you're protecting your family. There are no guarantees in life. I mean, my mom passed away when she was 22 years old. And so there's just no guarantees. And I think that is part of also how I see and view, life and money. And when you talk to us about life insurance and whole life insurance, so it just makes sense. And people listening probably know what I mean by you being able to simplify things. And then when you do things visually, I mean, you are incredible. Like to be able to explain it to me, it was extremely, no, for real. Like I want to give you props, Richie, because these are uncomfortable conversations that I know I didn't want to have. But you were definitely a good fit for us, and we're so grateful. And this is why I was so happy that you were willing to come on my show and spread your knowledge, because this is what I want to do. I want to give back. And I mean, I still have a lot of work to do in this area, but just having that starting point. And I have these conversations with clients. I mean, young people too, not that my clients aren't young, but with my college age students, and just, family members. I think it's such an important topic to be self-aware. It's part of our life, our well-being, our health, even all the things. All right, Richie. So you shared a lot of insight and knowledge, and people are going to want to connect with you. How can people connect with you? Where can people find you?
Yeah, as Liz's friend, I'm readily available to answer any questions. I can be reached via phone. 773-414-4914 is my cell. That is my cell phone. So I'm always picking it up. My my wife laughs at me. She's because I have my cell phone on my business card. And I say, people don't want to waste your time. So if they need you, that's why they're calling you. And if people need me, I want to be able to answer the call. And then you could also reach me via email. It's my first initial R, last name Marrero, Marrero, at 360benefits.com. And then you could also connect with me on social media. Richie Marrero all over, whether it's Facebook or I'm on Instagram as well. On Instagram, I usually just have a few pictures of my family. I think that's what I do on Instagram. And then you could also find me professionally on LinkedIn as well, Richie Marrero. Actually, I changed it to give my dad a little homage. I put my real name, Ramphis, Ramphis, Richie Marrero on there as well. As I've gotten older, I've reflected and I realized that my name has meaning, and it's a ode to my old man who's no longer with us.
No, definitely. I know. I was like, I know that I met you as Ramphis and you introduced yourself as Richie. So I'm like, okay, I always want to be mindful, but that's so important, right? I need to embrace my Elizabeth name. I'm still not
I know. as we age, I think we go through different stages in our life, and it's okay to evolve. It's okay.
Well, this is fantastic, Richie. Thank you so much. This was insightful. And I'm confident that you've helped already so many people, listening today to get started or to be confident that they can reach that financial freedom, whatever that looks like for each individual. I am so grateful to you. And thank you for being on my show.
My pleasure. It was an absolute pleasure to chat with you today, and I'm grateful for you as well, Liz. Thank you for trusting me and allowing me to be a part of yours and Juan's journey. And this is my little munchkin. Say hi.
Hi.
Thank you, Liz.